Kitco News special coverage of the PDAC convention is brought to you by Gold Mining and Uranium Energy Corp.
Peter Krauth joins us today at the PDAC, and we'll be talking about all things silver, its price targets, short-term and long-term, the history of silver, and more importantly, why you should or perhaps shouldn't buy silver right now. We'll be discussing both sides of the debate with Peter Krauth. He is the editor of silverstockinvestor.com and the author of his new book, The Great Silver Bull. Spoiler alert, you're very bullish in silver. We'll be discussing why.
Well, if you go by the title, it's no secret.
We're not going to go through the entire book. It's a great read, 300 and something pages. We're going to go through two of my favorite chapters, starting with your $300 silver call. Let's just get right into it, Peter. Why do you think silver is going to $300?
Well, when I did the research and wrote the book, I mean, some of it was even prior to writing the book, but I've looked at multiple indicators, and each time I look at these indicators and the different, inputs. I end up getting a $300 target. All these indicators tend to point to $300.
Okay, walk us through some of your indicators and your rationale, because I'm gonna be very technical with this interview here, because we've heard $100 silver, triple-digit silver calls by many notable people in the silver industry, Keith Neumeyer being one of them, a regular guest of ours. He's been calling for triple-digit silver for a long time. People are just tired of waiting for silver to even break above $50, which we haven't had since the 80s.
Right.
Forget $100, forget $300. We haven't even seen $50.
Right.
I can already see the comments in the section. Peter, don't tell us about triple-digit silver. Tell us about how to break through $50 or $30 first.
Right.
So anyway, all that to say is please walk us through your rationale and your models.
So I guess one of the most common and best known and perhaps most understood is the gold-silver ratio. And so it doesn't mean that silver has to go to $300 because of how the ratio might behave. But at least for me, it indicates the potential. So if you look at forecasts for silver prices, and so I'm not, for gold prices, so I'm not the only one who thinks gold will go to ultimately 5,000 or even perhaps 10,000 in a speculative mania. You've got people like Jim Rickards, Shane McGuire, who ran a gold fund for the Texas teachers retirement system. You've got Scott Minerd of Guggenheim, and you've got the In Gold We Trust report that forecasts relatively easy forecast to close to 5,000 in gold, and perhaps up to about 9,000, depending on how inflation plays out. So, all that to say that if you take even $5,000 in gold, and you look at the gold-silver ratio, when the ratio bottomed in 1980, and it took 15 ounces of silver to buy an ounce of gold. So, based on that ratio, at $5,000 gold, you're looking at $300 silver.
All right, we're going to unpack a lot of assumptions you made there, including the $5,000 gold call. We're going to come back to that. Okay, so $300 silver. Let's talk about how we get there. But first and foremost, suppose we have $300 silver tomorrow. Let's just suppose it happens tomorrow. A lot of silver investors, miners would be very happy, of course, but don't you see problems in our economy? A lot of industrial applications that need silver, they're not going to be able to afford to put as much silver in their batteries, in their solar panels. And we're going to probably see an industry-wide movement of thrifting, which is what we saw in 2011 when gold and other precious metals hit then all-time highs. $300 silver sounds like a problem to me more than anything else. Can you elaborate on that?
You're right. I mean, I believe silver would get to that kind of level in a speculative mania, and that if you get there, start selling, because I wouldn't expect it to stay there, and the stocks would explode. I wouldn't expect the stocks to stay there either at $300 silver. And you're right, it would be detrimental, very detrimental, in fact, for the industrial applications, because silver has become irreplaceable in so many ways in industry. So to have to pay that kind of money for silver, it's true that in many of those applications, it's very, very small amounts of silver.
Right.
So there's a fair bit of tolerance in terms of the price they'll pay for the silver that goes into those applications, but it still would wreak havoc. There's no question.
Okay. The question is when? When can silver reach $300? I pitched your story to my colleague Michelle McCory. First question she asked me was when. That's the first question in everybody's mind.
Right, of course. Mine as well. So realistically, I think, you're going to have to look out 5 to 10 years. These things always take longer. And I know, like you said at the beginning, people are impatient.
We're tired of being patient.
Absolutely. But then you shouldn't be in this game. It's not for you. It's not the place for you. People complain about $22 silver, but you had plenty of time to buy silver at $15 in 2018 and 2019. It was hovering at 15 for almost a couple of years. We're over 40% above that right now. No complaints from me in that respect.
But you're talking about a more than 10 times increase. Has that happened in silver's history?
Silver was up 3,700% in the 1970s. It started out at $1.30 in 1971 and peaked at $50. So that, versus gold, that did a 1,400% return. So silver more than doubled gold's return.
So there is a precedent of
most definitely
something like this happening. I'm curious as to why we never breached the 1980 highs, Peter. 40 years?
Right. That's a good question as well. It got to 49 in 2011, and that was somewhat of a speculative mania as well, and it sold off pretty quickly. But silver just behaves like that. It goes through long periods of consolidation, trading sideways. It ran to $30 in August of 2020, and then since then it's been in a range between about 21 and 29.
Okay, so Peter, nobody has a crystal ball. You don't know exactly when $300 is going to hit. Let's do some brainstorming together then. So in the 70s, it took how long for $1 silver to reach then all-time highs?
10 years.
10 years. Can we reasonably assume a 10x increase over the next 10 to 15 years?
I would say yes, absolutely. Okay. Even if it doesn't stay there, I think that the odds of some kind of a bubble is very likely.
It's very difficult to make predictions 10 years out, and who knows what the world's going to look like in 10, 15 years. I do have a question for you. Why do you expect the silver to gold ratio to hold 10 to 15 years out? I mean, let's assume that it does. You're assuming there's no external forces that would push the ratio apart or cause the two metals to diverge, right? What are these assumptions you're making?
So the ratio is at 82 right now. If you look over the last, say, 20, 30 years, it's averaged about 55 to 60. So we're already considerably above the average. Again, there's nothing that says it has to go back down. But if you just look at how it has behaved, that's a strong indicator of where silver is likely to trade relative to gold. So the odds are that the ratio will come back down at least to, say, 55 to 60. That's a reasonable target. And then, again, in a speculative mania, I don't see why it wouldn't go back down to 15.
Keith Neumeyer was famous on our show for saying 9 to 1 silver gold ratio, because that's the mine ratio of the number of ounces of silver to the number of ounces to gold. That's his thesis. Can you back that thesis up, or do you disagree?
I would absolutely agree, because if you look at that ratio, it's also an indicator. I'm not saying that it would go there, but it's indicative of where silver can go, because if you take, say, $1,900 gold, and you use that ratio of sort of 9 to 1, you're in the $300 range again for silver, and that's again one of the reasons I have that target.
Well, if you use a 9 to 1 gold silver ratio or silver to gold ratio, right, you wouldn't need gold to go to $5,000 for silver to reach 300. I'm doing the math here. What is that? You only need gold to go up 2-3x for
exactly.
for
say $3,000 gold.
Yeah.
At roughly, for easy math, 10 to 1, that's $300 silver.
Yeah, okay. That's really not too far away. But again, that's assuming a 9 to 1 silver gold ratio, which is not anywhere close to what we have now. Okay. I want to ask you why you think gold and silver have been sort of diverging this year. Now, gold is up 1% on the year. We're speaking today on Tuesday. It's going to probably change by the time we hear this interview. But right, silver has been down about 6-7%. The point being, gold has been flat, held its own against other assets falling down. Silver, not so much. Why the discrepancy here?
So 54% of silver goes to industry. And my view is the market's looking at the risk of recession and how that might affect the demand for silver over the next, say, 6 to 12 months or so. Yeah. And again, that being a big part of silver's uses, industry, solar panels, electronics, electrical, EVs, medicine, medical applications, equipment, and so on. So I think the market's sort of pricing that in, and it's keeping pressure on silver.
Okay. $5,000 gold. I didn't forget this. Let's revisit that assumption. So you said earlier that, again, depending on where the gold-silver ratio is in 10, 15 years, we could see $300 silver, all depending on where gold goes. You're assuming, of course, that gold and silver, again, the ratio stays constant, that they move in tandem.
Right.
But let's revisit the $5,000 to even $10,000 gold call. $5,000, first of all, is not a significant increase from here. I mean, it's 2x. It's not 10x or anything crazy. We've seen more than 2x increases in gold several times in history. So it's not impossible. But let's go to the more extreme end of your range, $10,000. What's your thesis there?
My thesis is that if you look at what's happening with inflation, and if you look at how other assets are hurting. In fact, since the start of the year, gold is, let's say, essentially flat. So anyone holding physical gold is a winner right now. If you look at that versus stocks, bonds that are down 20%, commodities as a whole since the start of the year have exploded. They're up 44%. So gold and silver are both commodities. And so the trade in commodities is indicative of where silver and gold are likely headed.
I have this chart here in your book. Approximated gold price in 2030 by distribution probability in US dollars. This is in your chart, it's from Incrementum.
That's right.
And you have not a normal distribution, a skewed distribution, but it peaks around $4,000 to $5,000 in terms of its highest probability. So 2030 is 8 years away. That's about a 2 times increase 8 years out. I'm not going to comment on that, but I'll let you describe or explain this model and how they came up with these numbers.
Right. So they look at the odds based on the growth in inflation, the rise in inflation and the growth in the money supply, and then they also look at the odds that will actually be significantly higher than what we've been experiencing over the last, say, sort of 10 to 15 years. And if you project that out, that's where they get to a rate. I think it's a price of gold that potentially would reach as much as $8,000 to $9,000.
$8,000 to $9,000 is in their lower range of the probabilities.
If you look at the bottom of that paragraph, you'll see where
model suggests a gold price of $8,000
exactly
by 2030. Interesting.
Yeah.
But how does that work though? Because it is a lower probability number.
Right. And so what it is that they're saying that they don't discount that possibility, given the way we're inflating the money supply.
Yes.
Right. So yes, it's been relatively crazy over the last say 10 or 15 years, and they're saying that if you look at the way gold behaved in the 1970s. Versus what we've done to the money supply now, that there are relatively high odds that we can actually get to as much as $8,000 to $9,000 gold.
Okay, so let's assume you have $9,000 gold. Let's assume, 50 silver to gold ratio?
15, you're saying?
50, 50.
50?
Well, what's the number you would use?
So I would say,
by 2030.
Anything below 30.
Below 30.
Below 30. You need to start paying attention to potential peak.
Let's just take 30. That's $300.
Exactly.
Okay, that's where it came from. All right, well, very good. Let's talk more short term then, and then I'm going to get to another very interesting chapter in your book. Let's talk more short term. All right, for those of us who can't wait 8 years out, what's going to happen to silver in the intermediate term, you think?
So I think that given the amount of industrial demand and the rise in applications, solar is the single biggest use for silver. 11% of all silver supply goes to solar alone. And that's been growing. The last year it was up 13%. It's forecast to grow another 12% this year. And the International Energy Agency forecasts over the next 8 years that electrical output, so electricity produced by solar, would be up 8.5 times current levels. So if solar currently uses 11% of all the silver supply, and solar capacity were to be up by nearly 9 times over the next, say, 8 years, technically it should consume all the silver. And so that's really, really big bullish demand on silver.
I know you're very bullish on silver in the near term and long term. I have nobody here to debate you, so I'm just going to play devil's advocate here, just for the sake of argument. Let's suppose we get a recession next year, and a lot of people are saying that we will have one based on a number of indicators that they're looking at. Now, in the past 3 recessions, 2020, a very short one we had, 2008, and 2001, in all 3 of these economic downturns, contractions, silver went down by a few percentage points. Not by a lot, but by a few percentage points. Silver typically does not perform well during a recession. One could argue that the economic conditions now are not conducive to silver because of its because, like you mentioned, its industrial applications. The solar panels and the EVs, they take time to materialize. We're not building infrastructure right away.
Agreed.
And in the intermediate term, well, we've got maybe a recession looming, and so industrial demand might wane a little bit, which would weigh down on demand for silver, and so that's probably not great for the price. How would you respond to that?
Yeah, I mean, there's no doubt that, and that's probably why we're seeing silver, we're seeing pressure on the silver price, and it's at the low of its range over the last 2 years. It's interesting to look at what it costs to produce an ounce of silver. And
well, First Majestic Silver has about 16. Their all-in sustaining cost about $16-70 to 18. I just looked at their statements last night, so I'm using them as an example.
Sure. So the industry average is about $18 for all-in sustaining cost.
Yeah.
So at $22, your profit margin's about 16 to 20%. That's not great, which means that there are less and less companies that would be interested in mining silver,
That's right.
meaning that would put pressure on the supply.
Can you then make the statement that the floor is the all-in sustaining cost? Because lower than $18, there's no incentive to turn on your drill.
Exactly. I mean, it doesn't mean that it wouldn't be that a temporary floor would not be below that, because we've seen that in uranium. They've been mining uranium at a loss for years because you can't just shut down a mine that easily. And having to put it on care and maintenance is costly as well.
Oh, I see.
So, temporarily below 18, anything's possible. We went to 12 in 2020, but we also ran up to nearly 30.
I think that's a very important point people need to understand. You can't just turn on and off your production like a light switch. It's costly to turn it off.
Absolutely.
And yeah. Okay. But suppose silver does fall below, let's say, the all-in sustaining cost of producers. What's the logical next step after that? I mean, you have decreased production, perhaps, and that brings supply back to equilibrium.
So if silver goes below cost of production, start buying because it can't stay there long. And
it's very interesting because the cost of production has gradually increased because of inflationary pressures, wage pressures, materials. And so what we're really seeing is inflation, which is completely independent of the silver price. It just happened because of a lot of reasons. Inflation is really putting a floor on the silver price. Could you make that statement?
I would say that industrial demand and the growth in industrial demand, in my view, is what's keeping a floor and a rising floor under the silver price.
Right.
And that investment demand is going to be the wild card. It is going to be the big driver in considerable upside.
Okay. I want to spend a few minutes talking about the history of silver because that's important. That's not often talked about in a lot of media. You wrote in your book, in bold words, I'm just going to read the bold paragraph here. Silver has been used by every major empire, starting with ancient Greeks up to 20th century America. Okay, we don't have time for 5,000 years of history, but give us your key takeaway here.
So silver is has been the most used currency in history for transactions. It's very simple. It's been the most. If you go back far enough, so about 2,500 years, the ancient Greeks developed fashioned the first coins, and then a few hundred years later, they created the Athenian drachma. Yes. So that became the first truly international currency, and it's been part of our money for 2,500 years. So it's only in the last 60 years or so, since the mid-60s, that silver was taken out of our coinage. So if you look at, say, 60 years versus 2,500 years, where silver's been part of money, my money's with silver.
Yeah. You have an interesting diagram here. It's a U.S. certificate, silver dollar certificate, dated 1935 in your picture here. I've actually been shown one at another conference recently in Vancouver.
Right.
Somebody showed me a silver dollar certificate dated back in the 50s.
Right.
I'm looking at it was phased out in 1964.
Right.
So it wasn't actually that long ago that in the U.S. we had actually government-backed fiat money that could have been redeemed for silver.
Exactly.
You could have gone to a bank or the treasury and asked for an equivalent of $1 in silver.
Exactly.
And we don't have that anymore.
We do not.
Why do you think that was phased out?
Well, it makes it a lot easier to print money. There are no restrictions, and it allows central planners and governments to feed their pet projects and expand the money supply. It's wars are costly.
I asked that because 1964 was before the end of the Bretton Woods.
Right.
Bretton Woods ended 1971.
Right.
And so, I don't know, the government was just thinking of phasing this out and then ending Bretton Woods altogether. Maybe it was a multi-year plan. But it did occur to me that those were two separate kind of
Sure. It did
events.
precede it, but it was only 6 years earlier. So, if I had to guess, my bet would be that it was part of the same plan. And being able to remove silver from the coinage, again, made it easier to produce money that didn't have the same value.
Do you think digital currencies, central bank digital currencies, and a digital fiat, digital dollar, is the next evolution of money? Could it be a replacement for what silver was for thousands of years?
I think it's the replacement for the money we have now.
Okay.
I think that a silver or a gold-backed digital currency would be the ideal, because you would have the limits on printing. You'd have a hard asset backing your currency, and you'd have the ease of transaction and the speed of transaction. You'd really have the best of both worlds.
In your book, you talked about the history of silver and the origins of silver being used as money, and you gave a lot of historical examples going back all the way to the Greeks, the Song Dynasty in China.
Right.
I'm not going to go through all of them. It's chapter 1 in the book. Did you talk about where silver is being used today as a monetary metal? Where can I go today to buy something with silver? Where would it be accepted as legal tender?
Nowhere that I can think of.
Why is that?
Because it's been removed from coinage. People have become accustomed to using fiat dollars, which is the currency of basically every nation. Not dollars, but some sort of a fiat currency. Yeah. But I think we will go back to that in some form. I'll give you a really interesting example. I was at the Metals Investor Forum a couple of days ago. Yeah. And a mining executive came up to me. I had my book available, and he said, this book looks really interesting. Would you accept an ounce of silver for it? And I thought, wow, that's great. It had never even occurred to me, of all people who wrote about this, that the book was close to the equivalent of an ounce of silver. Right. And then I thought about it, and I said, well, I do know that if you have to buy an ounce of silver right now, a Canadian maple leaf, for example, you're going to pay around $35 Canadian, and the book is retailing for $35. So I said, sure, I'll take your ounce of silver in exchange for the book. I'll do that all day long.
You might have more upside,
Exactly.
Exactly. You might earn money on that transaction somewhere down the line.
So the point is, I think that we both feel like we got the better end of the deal.
Did you accept it?
I absolutely did.
Okay.
And I think he may have gotten the better end of the deal in the sense that there's really a lot of, I think, interesting but also very, very practical information in the book in terms of how and why to invest in silver and how to build your own portfolio.
Like they say, knowledge is priceless.
Absolutely.
So definitely maybe a book is worth 100 silver coins. Now, Peter, let's finish up on the speculative mania you were talking about earlier. So where I was going with this monetary history was going back to what you said about the speculative mania. It occurs to me that people are adopting Bitcoin as legal tender. We saw El Salvador, a nation in Africa, was the second one. And I haven't heard any news of people thinking of going back to a gold standard or adopting silver or gold as legal tender, at least not in the headlines that I've been reading.
Right.
And so it seems like the world is moving more towards a digital currency system, whether it be through legal tender or just legal tender means you have to transact in it if the vendor asks for it, but it could just be allowed. So the world is moving towards a digital system. Where does that leave silver and gold? Where does that leave the speculative mania that you were talking about?
So,
how would that come about?
You know, if you're going to invest in gold and silver, I wouldn't do it because I'd be expecting or hoping for it to back a digital currency. There are already several gold and silver-backed digital currencies. Some will fail, some will make it. But an interesting point is that in mid-March, after Russia invaded Ukraine, the two largest gold-backed digital currencies, total market cap combined, reached over $1 billion. So that meant a lot, at least to me. It said that so people were interested in gold, and people were interested in digital currencies, and people who were comfortable with digital currencies, but were not perhaps familiar with buying gold as as an asset or as a hedge, saw the value in the gold, and said, "I'm at least willing to buy digital currency that's backed by gold."
Yes.
So that was, to me, a big sign of where things could be headed.
Okay. All right. Well, excellent thoughts, Peter. Very educational. And when does the book come out?
The book's been out for 5 weeks.
Okay.
It's been a bestseller, actually, since then. So I'm really happy with the response, and I've gotten some great feedback from people who said, this is everything I really wanted to know about silver in one place.
Well, thank you for dropping by our booth, Peter. Pleasure speaking with you and sharing our thoughts. Thank you for watching Kitco News. I'm David Lynn. Stay tuned.
Kitco News special coverage of the PDAC convention is brought to you by Gold Mining and Uranium Energy Corp.